Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, February 13th, 2024. It's 10:42 a.m. Eastern Time, so we're a little bit over an hour into the trading day and just wanted to get another update out to you. Obviously, I fired one off pre-market and then made a few comments there. And again, if you're actively trading or even swing trading, you want to know what's going on, come into the site from time to time and check. You can even subscribe to any particular comment thread. Just go down to the comments here. You should have already read this post if you're watching my video now. This is a post that went out this morning. And I know a lot of folks like these static charts. I call them screenshots. It's a little quicker. You don't have to, sit down and listen to a video. But the videos let me just kind of convey my thoughts, which I'm going to do now. NQ, okay, well, that's it. I'm not going to rehash something I already sent out. Most important things that happened today is Treasury is entering the yellow zone on the hotter than expected. It wasn't super hot, but hotter than expected CPI. And so here's the comments. Somebody said, will the gaps need to be backfilled? Here's my reply. Being that QQQ and SPY are going to gap down and open on those trend lines, I obviously posted this right before the open, I do expect Pavlov's dogs, i.e. the dip buyers, to step in. I can't say if they will backfill all or most of the gap, but I suspect some of it. So there's my thoughts. And this is still in real time. It was a great time to reverse this morning, which I went on to say. However, there is a shite ton of hot air in this market, so one can't underestimate the potential for a very crowded rush for the exits. Translation, I think a post-opening bounce is likely, but I'm very much open to those trend lines getting sliced through today. And we'll see. And I think we'll see this. They're going to buy the dip because, again, that's what they do. This is the hottest uptrend that we've had in years, or one of the, and again, it's all but guaranteed. I mean, unless you have some catastrophic news, that which it wasn't. It was a little hotter than expected CPI. So, and then someone asks again, yeah, that's a question. At least a little bounce. Yeah, absolutely. A post-opening bounce is likely and worth a shot for active traders to cover shorts and go long for a quick bounce and then back short again. So this brings me to where we're at today. That's certainly what I did. Those are major trend lines we hit this morning. And so right after the open, you can see they've gobbled it up, and it's already good for if you bought the open, which was a gap down to the trend lines, you're good for, depending where you bought it, a good percent or so. If you trade, active trading, what it's all about is you get a percent, 2, 3 here. And if you're trading, things that are leveraged like futures, you're talking, again, everyone's number is different. You can just do the math on 1%. But active trading is typically, you're trading, leveraged up. And so, it's going to put minimum hundreds, if not thousands, or, maybe even tens of thousands in your pocket, just getting those turns, if you have enough contracts at NQs and RTY. So that's it. So where we're at here is there's the trend line. It's a beautiful trend line as I've been speaking. So the odds for a reaction, as I said, we're very high on it, and we hit it. And you can see there, perfectly normal in a post-opening. We went a hair below on the open, and they immediately bought it up. And now, so here's where we're at. Likewise, this is good resistance. I just personally reversed those longs that I covered, came into the day short because of our very clear sell signals yesterday. Covered at the open, reversed it to long, just reversed here. Could turn out to be a bit early, but I like it. I like it right here, and that's why I'm doing the video for you right now. Came another pullback. Now, here's where I may be in and out, long, short again, 3-4 times today. I don't think they're going to backfill the gap in one fell swoop. But let me say this, if they do, wow, that's another objective entry. And I would not hold out. If you are targeting a backfill the gap, I would not hold out for a full backfill. I can all but assure you, or put a high degree of confidence, I should say, that sellers will step in early, most likely, if that gap, as they approach that gap. There's some resistance here. It's a little zone, if you will. So there's plenty of resistance overhead. And look, this may just be the buying op of the year. And I've been saying this over and over because I know we've got obviously a very loud and increasing, some loud increasing voices that are very, very bullish right now and have that raging FOMO trade mentality going on, fear of missing out, buy the dip. There's your dip. Again, this is the best long opportunity I've seen in weeks. Last time was right here, and I'll pull back to the trend line. I believe I mentioned that one is a long too. So there it is. If you are long and you think we're going, again, I'm gaming it as a bounce, and then I will, be, once this trend line goes, that'll be the next objective sell signal, and time for swing and trend traders to increase position size. In other words, a swing trader, there's a lot of, I talk all these terms, active trading, swing trading, that's a 2% drop, 1% bounce, so 3% you made, as much in less than a 24-hour period. If you traded it that way, then the market's gone up over, let's see where we were, from last 3% move. I'm going back, was this whole thing right here. So it took 2 weeks, the entire month of February, for the QQQ to go up 3%. And if you just waited patiently for an objective entry, which was yesterday's sell signal, you made 3% in less than 24 hours. And that's active trading. Now, I know I got a comment the other day. It was someone's kind of like, why do you post active trading stuff? Look, I post what I do. I don't run this service for please all the people. You can't please all the people all the time. That's saying please some of the people all the time, all the people some of the time, but you can't please all the people all the time. I post what I do, what I see, where I see opportunities, what I'm doing myself, and that's it. So I will post when the markets are conducive to active trading, which they are when the VIX starts to spike. And I've been talking about the VIX lately. Is looking pretty nice, and it is up pretty healthy today. I'll get to that one second. But where I'm going with that is that yes, this yesterday could have and was also a short entry for typical swing traders. However, you wouldn't want to be to a full position until this level goes, whether we bounce here, do that, whether we go up another 5% and then come down and take out the trend line. At this point, this is a full position. A full position isn't your entire account. It is if you want to trade like very aggressively. I'm talking whatever you deem, if you're wanting to trade the Qs, NQ, QQQ, whatever you deem a full position is of your portfolio, 10, 20, 30, 40%, whatever that number is, that's up to you. That's how I look at it. So yes, you had both a swing short sell signal, but I said, and it was so in close proximity, they're talking 2%, and that's where the next, and pretty much all in, again, not all in portfolio, all into that position sell signal would come from, break on the trend line there. Let me show you the futures real quick. Okay, this is a 3-month hourly chart. The last few I got out to you on NQ were the 120-minute chart, because I can go out a little longer on this service here. But this is the primary uptrend line. We're just kind of zoomed in. It goes back to the October lows. This ends here. So it's just to the left. If we extended it, it would come like this, and prices would be down here. This is the end of November. And so I believe all these levels were on the last 30-minute I would have given you. The only one I added right here, this one here, I have a zone. So this is why I reversed. This is the bounce I was looking for. Again, that's a slight undercut, but QQQ and SPY at the same time, we're all hitting those trend lines. And when you have a lot of momentum down, especially in the pre-market, it's what I call momentum-fueled overshoot. It was a perfect plus right at price support. So this was a 10 on a 1 out of 10 to reverse today. And again, I made that clear in the comments section this morning for those that asked. And there's my bounce target right now. I'm not going for a full back gap fill. And I'm actually, there's always powder to add, but I'm reversed it pretty hard right before this video. And that's why 1776 up to 17830. You were talking basis points. It's a very tight range. That's where I think there's a good chance, at least for a reaction, possibly for the end of the bounce, but at minimum for another move down. May only be a quarter point, 0.3, whatever. Or, what I might do at this point in time, and as of now, I can almost tell you, just active trade of me, I will most likely cover this and then be back in and out a couple times. But swing positions, I also trade. I speak out of two hats. I wear two hats: swing and active trader. And swing trading, I would consider a stop, and I may leave on a couple accounts that are more swing accounts and active trading accounts. Set some tight stops there for some shorts that I added today, and let that run down with stops there. It would be ideal not to see today's gap get backfilled. Let me just say that for the short scenario. And again, I've already pointed out for the bull scenario, let's keep it simple. Pull back to trend line support. If you've been bullish looking to get in and you didn't buy today's pull back to the trend line, when do you buy? But again, if we go deeper, I'll give you the additional targets. There'll be levels that short side targets, but also pullback trades for long traders looking to get in, add back to longs, et cetera, et cetera. But you can see the divergences say this is most likely the start of something more. So I just wanted to mention, there's your resistance. Again, looking back at QQQ, there's the gap. A lot of traders are going to be eyeing that. Again, if you backfill it, it's objective. No guarantee that we can't go up through there's a lot that can happen, guys. Here's the objective, other than right here, which is just a very micro level I showed you on NQ. The levels are the gap right there, which is yesterday's close, then a back test of the minor trend line. Remember, this was what got us short yesterday. The minor trend line break right here. This is the minor trend line. And so should we carry up a little higher? Again, if it's relatively soon, I give few guarantees. I try not to use the G word a lot, but I can guarantee you if it happens anytime very soon, it's going to be still a divergent high like it was here, because these divergents will not be taken out. Again, if it happens anytime soon. Now, if it does this and it takes weeks or months to get up there and then take out those previous highs, maybe the divergences get taken out. But based on how far these indicators are lagging, here's the RSI. We just hit overbought levels. And again, this is another reason of one of many. When you look at the charts, look at all these things. This is why you don't want to short today's gap down. You wanted to be short into it. Take that sell signal yesterday on faith. Like I said, when somebody asked, hey, CPI's out tomorrow. No, take it on faith. Sell signal is a sell signal, or at least this one I would take on faith for the reasons I said. But, here it is if you're bullish. This is a 60-minute chart. If you didn't buy today's dip, pull back to excellent support on a relatively rare oversold reading on the 60-minute RSI. When do you buy? Now, and it may work and it may pan out for new highs and beyond. So that's that. So there it is for those bullish looking to buy dips, and for those that are looking currently shorter, just actively trading. Those are your levels, guys. We're at one right now, about 430 on QQQ. Next level being the gap, which is right about 435. But again, traders are probably going to look at the bottom of these candles. They're probably going to step in a bit early if we do happen to push on through. And it's not much more. We're talking another, what is it, 0.5%? No, 0.8%, 0.8, almost 1% all the way up to the gap from here. So that's certainly possible. And what you don't want to see if you took a starter swing position and you're waiting to add on here, number one, I wouldn't add. My preference, because of the resiliency of the recent trend, would be to wait, if you did take a starter short there, to add on wait for a solid break and or especially a 60-minute close, even better a 120 or a daily close below the trend line, right? Because remember, these trend lines are also the same ones on the daily chart. I'll get to that in a second. You could go up there and a back test would be an objective entry, but the problem with back tests, trend lines are dynamic. They're meaning an uptrend line comes in at higher and higher prices every day, downtrend lines come in at lower and lower prices, well, every minute, every second, theoretically, because you have a positive or negative slope. And so sometimes you back test, then reject, keeps back testing higher. Sometimes you can get on through there, but I can say this. If we power on through there, take back the trend lines, take out the previous highs, that's going to be nothing but bullish. So I'm looking at this top, and I'm going to say it like I have. Every top for the past 6 months is potentially the top, potentially the end of the bear market rally. We'll see. Time will tell. And so if you want to treat it that way, again, you got to keep your stops tight. And if it gets stopped out, hopefully you made a little something. Now, look, You can take it this way too. If you're a swing trader and you shorted yesterday's breakdown and you put a stop above or at entry for break even, then that's good too. Because remember, we broke down before the gap, so you'd have a stop a little bit above the gap. So if they backfill the gap and then some, that's going to be a little bullish. And so you can have nothing at risk if you set your stop at break even, if you shorted that down, and potentially may have shorted, again, potentially. I'm not trying to get ahead of myself. What could mark one of the best shorting ops in generations, really, if things go where I think they're going to go. But that's, again, getting ahead of myself. We don't have a lot of hard evidence, or really much, if anything. This is just short-term sell signals now. But remember, because I don't ever forget, I look at the weekly charts, and, this is the same stuff I've been talking, where I was open to this somewhere in here being the end of the bear market rally back then. I kept open and almost on a daily basis reiterated I still had an alternative scenario, a marginal new high in QQQ, and that's what we got. And I can say this definitively. If I liked it back then, thought there was a potential for a major top, I love it now. This is much, much, much better. And I'm talking on the QQQ weekly and the SPY weekly. Why? Because we have what we don't have back then. What we didn't have in late 2023 was negative divergence on the daily. You know me, I love me some negative divergences, guys. It's not the be-all, end-all, but that coupled with overbought conditions, extreme sentiment, negative market breadth, deterioration in the internals, fewer and fewer stocks doing all the heavy lifting, are about all the ingredients you can ask for in a major trend reversal. Everybody and their brother is bullish now, thinking we're going to go up, and maybe a worst case scenario, we're going to, even a lot of bulls. Yeah, okay, we'll get a little correction soon, a pullback. It'll be a good dip buying opportunity, but very few are saying this could be the end of the run. With I still maintain these longer term targets. My T4 has yet to been hit. We hit 1, 2, 3 on the way down. T4 is still there, and potentially down here may add a T5. But again, that's it. Divergent high, we got that. That was the biggest 42% drop roughly. No, I'm sorry. It was a 35% drop in the NASDAQ. Divergent high, double digit divergent high before COVID, 36% in the S&P, I know. Divergent high. So that's it, guys. I just wanted to point that out. And so what I did, I tweaked this uptrend line off the October lows. By the way, that's the same trend line that I've been highlighting for last couple of weeks here, plus on the daily and 60-minute charts. So, all right, let's move on. Here it is on the daily charts. There's QQQ. There's that beautiful uptrend line off the October lows, and you can see on the daily. I'm gonna have to see when I roll. Sometimes I have to tweak it a little bit. There's a fit, just about a perfect hit. So that's it. We hit. We got the initial reaction. And it's so far very small. That's what I do. Sometimes I try to thread the needle, pick up nickels in front of a steamroller, and I did. And now I'm short. And if we get up there, I'll probably add a little more dry powder. I'll look at everything, but that's why I do these videos. I've been looking at the fangs. I'm going to get to those, but let me just cover everything else. There's SPY. Perfect. I mean, literally perfect hit of the trend line. So that was a 10 on a 1 to 10. You took yesterday's sell signal. Remember, we had the short-term uptrend line. It was there on the 60-minute chart. Beautiful little sell signal. Hit the trend line. This is it on a 60. You can scroll back all the way October here. And there it is. Support below. So if SPY breaks down, whether SPY bounces or not, there's the gap in SPY. So I'm just gonna call this right now my max bounce target, right? It's not my preferred, but a max bounce target, the top of the gap, where I think it would be objective to add shorts, if or initiate a short if you didn't short yesterday. And then of course this is the big one, when the trend line breaks. Now, if and when the trend line breaks, you have some decent, not super solid price support there, maybe a back test, maybe not. One thing is, again, like I said earlier in that comment, there's just a lot of hot air in this market. So, and guys, and a lot on the economic calendar this week. Tomorrow's a quiet day, and then Thursday picks up. You got jobs reports, all that other stuff, and so there's a potential for the 1-2 whammy now. So that's that. And probably, other than the breakdowns, yesterday's sell signals And today, again, no sell signal today. Today was a buy signal, if you will, or an objective long entry time to active trader covers short. However, we're in very close proximity. And remember, those October trend lines are getting long in the tooth, and you have divergences and overbought conditions. So from my experience or my opinion, a breakdown appears imminent. Imminent doesn't mean seconds, doesn't necessarily mean minutes, but it means days, most likely from here. Days to no more than a couple weeks, probably days, maybe even possibly today, late day dump. We'll see, or later in the week. And this is the big one here right now. This to me is, I get that chart out to you with the yellow zone, green zone. So today we solidly entered the yellow zone. You can see this is it. The 10-year bond is down in there. Certainly has, well, actually, look at this. It's just now starting to take out the RSI divergence. If it turns up soon, it's close enough. You can say that's a divergent low. And there's a potential to rally back up in here, and that'll be a false breakdown. But as I like to say, I'm taking this one on face value. It is what it is, and it's not marginal. The last couple of days I didn't tell you it was in the yellow zone, even though we were just kind of testing the top of it. It was too close. And again, you've heard me say this many times. If you have to squint to see if a support or resistance level is taken out, give it the benefit of the doubt, especially against the prevailing trend. This, you don't have to squint. You can see the 10-year gap way down. Treasury yields shot up, bonds shot down on that hotter than expected CPI number. And so here's, if you're going to watch one chart, I'd probably watch this one. If the 10-year can make a solid recovery back into the green zone, that's this box right here, then this is going to be a whipsaw, and that could be pretty powerful and bullish. And what could do that? Well, all the economic data we have coming out the rest of the week certainly would be the fundamental catalyst. Technical catalyst could be these divergences playing out. However, divergences, these are not confirmed. They're what I call unconfirmed divergences. Something I made up many years ago, just because I like to see the PPO needs to make a bullish crossover at higher levels, put in a higher trough. And right now it's still pointed down. These are momentum indicators. RSI is going down. So, and obviously the bottom of the yellow zone is also support. And that's it. So I was spot on. I said this is where the stock market would start to take note of rising yields. And we've had the biggest drop in stocks in months today because of that. And it's far, far, far from mere coincidence. And then the orange zone, as it says there, the stock market really starts to take note of rising yields. I think you know what that means. And then red zone, the stock market will start to freak out. Look, we're only a few hours, we're halfway into, but only a few hours into my yellow zone. And the day is still young, and they're buying the dip as expected so far. So that's it. These are the things to watch and react accordingly. And if you're bullish, again, and you disagree with where I think the market's going intermediate and longer term, then you would want to see and maybe act on a recovery back into the green zone to help. That means what it means is bond prices are going up, means yields are falling, and then the Fed, cuts are back on the table. It's not that they took them off today. It significantly changed the odds of the next cut, when it'll come, and how many we're going to get this year. When you had a hotter than expected. And it's just going to start that whole discussion that I've been talking about for a while, when everyone had just completely, I'm talking the majority, not everybody, but had written off inflation as mission accomplished. And so now, and it may be fleeting, guys. It may be one day, they talk about, oh, well, what if inflation does start to come back now? And again, so we'll watch this stuff going forward. Bonds will be hopefully an accurate guide. For years there, I said that, the Fed had almost completely destroyed the mechanism of price discovery, which is the natural process between buyers and sellers that determine a price. And because during all the quantitative easing, and especially after COVID, the unprecedented and just almost mind-boggling amount of intervention into not just the Treasury market, also into corporates. The Fed, invoked emergency powers that were buried somewhere in their charter, from way back when to go in and buy. They were buying corporate bond ETFs. They were buying FALN, fallen, which are, and they were buying junk bonds and everything to stem the market up. So that kind of gave a distortion to, but where I'm going is, for years, pros, experienced traders, even if you only trade primarily stocks, you watch the bond market for clues. The bond market is, again, can often tell you where things are going and give you some insight on equity. So that's it. I don't want to beat a dead horse. The levels to watch. Anything that's remaining in here is net bearish for the stock market. A rally back up. Remember, the top of the yellow zone was support, and support once broken becomes resistance. And if we continue to go down here, and we don't even backtest, that's going to be pretty darn ugly. And again, so this is a kind of a increasing thing like this, where the stock market starts to take note. We're down today, but nothing catastrophic. It's been a strong uptrend, and bulls can make the case this is a long overdue pullback correction. But again, this will be incremental here and increasingly bearish for the stock market if and when that happens. So keep an eye on it, and maybe we never get to the bottom of the yellow zone. Maybe we never get in the orange zone, or maybe we never get back in the green zone. So we'll see. All right, and I'm going to keep it short. I'll wrap it up here after just a quick overview of the FANGs. So again, the bounce off QQQ as expected. And then what I'm watching on the market leading stocks, the big FANGs, or Mag 7 or Mag 5, whatever you want to call them. You guys know the lot. Here it is. This is there's an uptrend line off the January lows for Microsoft, which I just added, broke. I called that back then a potential divergent high. We have confirmed divergence, so I can strike the word potential. And a break of that trend line there. Apple's been, Apple peaked so far back here, pretty much put in a double top with big divergence, and is just sucking wind since. Year to date, the stock it's about flat. Here's where we closed. There's January, the opening right there, and we're slightly negative, no big deal. But again, it's not going down, it's not going up, and that can be viewed as healthy as long as it's consolidating and holding near the highs. But Alphabet trend line to watch right there. Amazon. See, Amazon and Meta are the two, and NVIDIA are probably the ones, they all matter, but I'm watching these guys. There's a trend line that I had. We had a little whipsaw through it, but you can see Amazon and Meta had the big earnings gaps. And so there's the line. So there's your earnings candle, and I'm putting the line at the bottom. So they tested the top of the gap. This is the gap right here. Tested the top, 1, 2, we were above it those few days. We shot into it today, but again, right at the open, we hit the trend line. So let's just say you were trading Amazon in a vacuum. Here's the takeaway. You would have not shorted that break in that gap down at the open that went slightly under there, because QQQ and SPY hit and the majority of stocks hit support at the same time. You would have held off or even bought the stock to gain this little bounce off it. However, if and when that goes now, about 167.50, or to play it safe, wait for a break of today's lows, that's going to be bearish, because then you've entered the gap, and that increases the odds of a backfill of the gap. And it also then gives you the bearish PPO crossover that hasn't happened yet, but it's pending right here. A lot of things will happen. You're at overbought conditions, and so these are the levels to watch. And I know I cover a lot, and sometimes it gets a little confusing. Set price alerts. Just go and put your candlestick there. It's a low of 165.75. Do that. Set the alert on QQQ and SPY under today's lows. And then you can look at, let's see, NVIDIA. I'm going to tweak this trend line. That was a breakdown and a back test, and it's rolled over, so I'm going to add a secondary trend line now that I think will be significant right there. And then Meta. Meta is a big one too. Remember, Meta also, like Amazon, had a big earnings gap right there, and it's been dancing on that gap since. Put it right there. Boom. Boom. Again today. So this is what you want to watch. So pretty much a break under 453. Those are the things I'm watching. So to summarize this, if you are bullish, you buy today, you bought trendline support, or you buy it now, we're not far above it. If you've been looking to get in and you think this market's going to the moon, these are objective entries. You've gotten Meta and Amazon, two of the biggest stocks out there, both at key gap support. I see it the other way. I'd rather wait. Even though I bought the market today and gave that bounce off there, it's not much, but I'm waiting to add now and get more aggressively short if and when all those things happen. SPY, QQQ, let's keep it simple. SPY, QQQ, Meta, and Amazon take out today's lows. So if you got price alerts on all four and they all pop, 3 of the 4, even 2 of the 4 should probably do it, but you get 4 of the 4, take it. If they turn around and gun it on some economic report or something else, no big deal. You just stop out, realize that it proved to be a whipsaw and it's not going to pan out. Set your stops somewhere above there. But I think there's a good chance. And if that happens, again, you can look at it as a quick pullback trade. This is the primary uptrend line on Meta, which I've been saying for months, needs a break, and it didn't break. Post earnings, it popped up. That's certainly a target. It would also come in with a gap backfill. And they'll probably be buying Meta with both fists on a gap backfill. So here's how you trade the market and or Meta. You swing it down there, game the bounce most likely. Unless something bad's happening and we have a lot of momentum, we could smash through these trend lines. Again, there's a lot of hot air in the market, but that would be a drop of, I'm going to have to borrow that, move that out of the way so I can measure. That'd be a 14% drop just to get down to the trend line and that 394.50 gap support. So keep that in mind. In Meta, it won't take the market down that much. Meta has more hot air in it than the this void right here, as does Amazon. All right, guys, let me wrap it up so I can get the video out to you. And again, if active trading is not your thing, I think I made it very clear on how swing traders, whether you're sharing my near to intermediate and longer term bearish outlook, or if you're bullish, same levels, do it in reverse. Buy those pullbacks to support instead of waiting for those support levels to break. Those are the two objective times for short sellers. You wait for a break of support to short, or you wait for a bounce back into resistance. So come there, boom, something like that. Those are rally back into resistance or break of support. And then long side traders buy pullbacks to support or breakouts above resistance. All right, I will stop it here, get the video out to you. It's only 32 minutes into it, so relatively short. And I'll do an update at the end of the day if anything changes. And I may get one out anyways, and I'll continue to hunt for other trade ideas as well. This has been Randy Finney with Right Side of the Chart. Have a great day.